Victoria has another property tax. The Commercial Industrial Property Tax Scheme, or CIPT, was introduced back in July 2024. Now that it's been introduced for over 12 months now, we want to see what impact it has on commercial property investors and commercial property owners. So we've invited one of our good mates, Jack Nevile from Neville's Lawyers, to discuss and tell us what CIPT is all about, how it gets triggered, how it impacts property from a legal perspective, and what his clients have done to navigate through this CIPT tax. So you definitely want to stay towards the end because he's going to explain in layman's terms what CIPT is about, what sort of financial impact it has on commercial property. So stay tuned.
All right, well, we'll go like this. So basically, just a bit of a spiel about us. I don't think we've had a chat at length because I haven't come up to see you guys yet, but I do plan on doing it. But we've been around for a very long time. My granddad started the firm. That's him in that photo there a few years ago. We're in Collins Street. We do primarily, the inner city and surround stuff. Residential, commercial. We've got very multilingual staff down here. We've got quite a lot of international buyers, so we make sure that we can service them too. And then we have a relationship where we have to look after our clients first and foremost, but like with Anna, we'll look after you guys as well whenever you need help too. So that's just us. But I thought I'd get into basically a background into what's going on down here. You guys obviously know, you work in the industry, but Victoria needs money. I mean, that's just the reality. They're looking at different ways to get it. They're trialing a whole bunch of taxes. To be quite frank, the two best ways that they've found to do it are taxes on foreigners, because foreigners don't vote, so the government doesn't lose many votes, and then commercial property as well, because there's not that many votes in there. So we don't have, like you guys up there, we don't have coal, we don't have that much gold anymore. You guys do, you've got iron ore, resources, these sorts of things. We can only really tax, payrolls, property, that sort of thing. It's just not that, it's not that dynamic down here. So, they're testing out a few things. And one of the problems that we've been having is that when you're using property and stamp duty, especially as most of your tax base, it completely depends on the market cycle. It fluctuates like this. So the government, hasn't really been a big fan of that. They love it during booms, but whenever there's a downturn, they start talking about other ways to raise revenue. And this is what they're trialing this on commercial property as a way to, just normalize that duty stream so that they're not getting huge amounts of money in booms, not so much in busts, and that they can, I fully expect, after about a few decades of this, they can, or even sooner potentially, they're going to put this pilot, they can use this as a pilot program, see how it works out, and put it onto residential property. So that's just sort of a bit of background as to, what you can expect and why they're doing this sort of thing.
Is that since COVID?
Is that since COVID? Yeah, definitely. I mean, we spent a huge amount of money on the lockdowns and we were locked down forever. So that didn't help. It wasn't amazing before COVID either. I've got to be fair. It wasn't all that. We have huge infrastructure projects. So we've got the Melbourne Metro Tunnel about to open. I think that opens within the month. That's going to be amazing. And then also the suburban rail loop. I mean, we've put huge amounts of money into that. It's unfunded at the moment. The government's committed 2 billion, but it's going to be on paper, it's 150 billion. And with all government projects, you can slap an extra zero on the end of them usually. So we'll find out how much it actually costs when it's built over the next 20 years. But yeah, big infrastructure. We've taken away a lot of level crossings. We've got the northeast link coming in. So it's a lot easier to get around, even with the big population growth. If you're a lot of people talking about waste, and if you're going to waste money, infrastructure is a great way to do it, just because we actually get something out of it at the end of the day. So, we'll see how it goes. I mean, these things take time, and we'll see if we get value for money out of it. But at the very least, we are getting something. So this is our net debt as a proportion of the gross state product. So you can see, obviously our income's not great, and our debt's very high relative to it. And, that is not an exaggeration. So this is the ABC. This isn't some nutter on Twitter. And they've put together the New South Wales, Queensland, and Tasmania, net debt as a proportion of the state product. And you can see that we're basically doubling you guys by ourselves. So pretty impressive. And that's why, we're looking at new ways to expand the tax base and just sort of keep things rolling along. This is a chart of the stamp duty that the government's collected every year. You can see that it trends upwards, but it is cyclical. You can see the downturn in 08. You can see 11 and 12, it was came down a bit. 2018, when interest rates went up, it went down for 2019, dropped in COVID too. Had that big boom period, 2021, great year for property. And then since then, obviously the stamp duty started to go down, and it looks to be, it's expected to stay down for a little while longer. I don't think anybody thinks we're going to get back to, 2021 anytime soon. So that's why they're looking at ways to normalize the revenue streams. And this is mostly residential property, mind you. Commercial property makes up a large amount of it, but it's not the balance of it. So they want to, it's a phase-in system, basically. They don't want to shock the market. If they just applied this today to everybody who had been, to own commercial property, you'd see, chaos across the sector. People who bought last year be very hard done by, having just paid stamp duty and now with this new annual tax. And it's also a shock for tenants too, because you have, in residential property, you have 1-year leases over a period of time. With commercial property, I mean, look at this YMCA lease, right? 15 years, 15-year option. You have 30-year leases. You have commercial property that's leased for, 50 years or longer. You can't just be throwing new taxes into the mix that some tenants would have to pay for. So they're phasing it in so that everybody knows over time, what they're going to get. But that does create some unusual outcomes that you guys are going to have to deal with, and so am I. But we'll walk through those later in the presentation. So at the moment, it's 1%. Like with any law, it can be changed. It's expected to be 1% for the foreseeable future, but this number can go up and down. It's currently 0.5% for build to rent. So the government's already showing that they're happy to change the numbers around if you do things the government likes. So at some point in the next few decades, I do expect certain industries to get 2%, others 1%, or maybe they'll just change things around. We'll see how it goes. But at the moment, we're basing things on 1%, but that matters for your valuations. So the AVPCC numbers that show on the council rates and the state and the land tax certificates, that's the way to basically check what's going on. It changes with the use. So we submit these on notices of acquisition. As you buy different kinds of property, different things will happen. I've got a client buying a church right now, which is technically not commercial, but it's going to become commercial. So these things do change, and it does make, especially with this tax, it makes it a lot harder for us. But we'll work through it. It is what it is.
So just kind of that. So the 1% right now is happening currently, or is that being phased in? I mean, which properties are?
So all properties that transition into the scheme get 1%, except for build to rent. So if you build a tall apartment tower and it's commercial residential, so commercial residential is the term, then it's only 0.5%. But for every other property that's going into this scheme, it's 1%. And then we'll talk about when that kicks in and the circumstances. But keep in the back of your mind that, a lot of people are sort of thinking, well, it's 1% now, but as with every other tax they've introduced in Victoria, especially on foreigners, they start at a very small amount and then every year they gradually increase it. So I don't expect it to change soon, but maybe in 10 years, that number might be different. But just keep that in the back of your minds. Hopefully it stays the same. So at the moment we've got commercial property. Almost all of it's, under the old scheme. I've only ever dealt with one in the new scheme so far. But at the moment you have an entry transaction. So since 2024, or 1st of July 2024, anybody that sells land needs to expect it to come into the new scheme. If stamp duty isn't payable on the transfer, then it stays under the old scheme. So, people who die and pass it along to their kids, super funds, handing it over to the beneficiaries, those sorts of things are stamp duty exempt. So it remains under the old scheme. So it's only really when there's a sale or purchase that they're trying to, transition things. Part interests. So, a lot of people might be shareholders of or unit holders or hold, a 30% interest in property. An aggregation. When 50% or more of a commercial property is transferred, whether that be by way of units sold or percentages of property of tenants in common, then you're going to have the whole property will transition to the new system. And in order to catch people who try and be clever and say, all right, well, let's sell, 4 separate lots of 25% each, what they say is within a 3-year period, if 50% or more is transferred, the whole property comes under the new system. So I don't know if you get people who buy, fractional interest in property, but they need to know that there's suddenly a larger risk in doing so, because if the property is transitioned and it's out of your control, so say you own 20%, somebody owns 80% of an income stream by the way of a commercial property that's let on a long-term lease. If you own the 20% and the 80% owner sells, you're going to start having to pay CIPT in 10 years' time. It's completely out of your control. There's nothing you can do about it. That might cause disputes. So, it happens in unit trusts more so than it does actual tangible interest in the property. But it's just something to keep in mind, because that is foreseeably an area where people may be caught out by their business partners or co-investors deciding to get out of an investment earlier than expected. And then suddenly the remaining owners, changes their income stream.
So that example will be like managed funds, right? If part of the fund decides to sell some of the units, let's say they sell 50% or more of their entitlements, and so that triggers the CIPT.
On the whole property, yes. Now there are exemptions if it's now if the main purpose of the entity is to own the property, then yes. If there's other purposes, then they can still stay under the same regime. So if you go and buy, call it any of these ASX listed, land holding companies, you can trade in and out of that. That won't count for the 50%. If, however, you've got, 3 partners of a unit trust and they own 33% each and 2 of them decide to sell, then it can transition under the new scheme.
Right. Okay. Makes sense.
But for you and for this presentation, we'll just stick with the, transfers of land, how that's going to work.
Yep.
So for the first purchase, and this is almost, like I said, I'm only dealing with one that's already under the scheme, so there won't be stamp duty payable, but stamp duty is payable as normal. The Treasury will lend money to cover the stamp duty if people want to do it. Nobody's done it yet that I'm aware of for my clients. I'm sure it's happened. People are doing it. I expect people aren't doing it because the Treasury is lending at commercial rates and they're 10 years fixed. So I think people are saying, look, rates are pretty high at the minute. The Treasury charges their bond rate plus a commercial spread, and there are early break fees because they're selling a bond to fund it. So I think people expect rates to come down, and therefore they're saying, no, we don't want to go with the 10-year fixed. We'll stick to variable with our current lender. Most people buying commercial property are taking out a bank loan, so they might as well just tack on the stamp duty onto that loan. Some lucky people who've got cash, they could do either way, but I think they'll just pay cash too. But we'll see, when rates come down, this might change and people might say, no, I want that 10-year fixed, and we'll see how that goes then. But just keep in mind, it's an option for purchasers who think, I don't have money for the stamp duty, but I still want to buy this property. Rare, but it may happen. So CIPT will begin at the same time land tax is struck, which is midnight on the 31st of December, and it'll begin 10 years after the entry transaction. So, say Kevin buys this property, his first CIPT year will commence 10 years afterwards on the 1st of January. That's when it'll be levied. Between now and then, apart from that first payment of stamp duty, the property is not taxed by CIPT. So you can transfer in and out, you can sell it on, you can do whatever he likes. The subsequent buyers won't pay stamp duty. There are some interesting scenarios to think about, but I'll cover that in another slide. Are there any questions on the entry transaction and that sort of timing element of it?
Yeah. So my question is, let's say one of our clients decide to take up the Treasury loan, and they decide to sell 5 years later.
Mm-hmm.
So does that mean that they need to then pay off the loan at settlement? So you can't pass on that loan to the next buyer?
Can't be passed on, must be paid at settlement. It's a first charge on the land, like everything else by the government. So it must be paid at settlement if you want to sell.
Okay. And then if it's at a fixed rate over 10 years, so I presume that's a principal and interest payment, because it's like paying down a car loan kind of thing.
So yeah, it is I think it's not, Yeah, it's not it's amortized on the percent that was payable over the whole loan. So they fix that annual payment and you keep paying that as you go. It doesn't go down in time. So
Yep.
that's the 10-year fix. But I
Yep.
can double check that and come back to you. Basically,
Yeah.
the point is it's the government bond rate plus the spread they determine every year. I think this year it's 2.25. So it's basically what the banks are charging anyway. Yeah.
Yeah. Yeah. So my sort of follow-up question on that is, you basically got a loan from the government. So when a bank loans on this, when a bank does an assessment on a property, they will consider this as a liability on the property, wouldn't they?
100%. Yeah.
Okay. Okay. And then this payment is not recoverable as outgoings.
No, the
Just to be
tenant won't be
clear.
responsible for this. This is
Okay.
entirely the responsibility of the owner. Yeah.
Yep. Okay.
In the same way as any bank loan, like if you could pass on, your mortgage repayments to a tenant, you'd be doing pretty well.
Yeah. Yeah. No. 100%.
I have a
Okay.
question, if that's okay. Let's say if a new client is buying a property now, can they choose to go with the old system or with this new CIPT system, or it's a must to go into this?
No, it's compulsory. Yeah, they have to go under the new scheme. So it was a bit interesting, last year around the 1st of July because, the threshold was an arrangement. So if you made a deal before the 1st of July, you would remain under the old system. After the 1st of July, you'd be in the new system. Most of my clients actually preferred to be in the new system because if their holding period isn't very long, I mean, if you've got a very long holding period, the old system's great. If your holding period's shorter and you're planning on buying this, maybe doing it up a bit or finding a better tenant, increasing the rent and then selling it on, the new system's better because it's expected, and we don't really know, but it's expected that the market value is going to be substantially higher given that there's no stamp duty payable to the new buyer. So we'll see how that plays out. There's going to be some strangeness with pricing, as we'll talk about in a minute. But here's an example. I mean, if you buy a warehouse for $8 million today, it was last sold in 1990, and the land value is $4 million, then the stamp duty on that's $500,000. If in 5 years' time she goes and sells it, the land value is now $5 million just by inflation. Bob doesn't pay stamp duty, and then from 2036, he will pay 1% of the existing land value, every year. So as the land value increases, that CIPT payment will go up. So with stamp duty, you sort of fix it in. It's an upfront cost, but you can amortize it over the whole life of the ownership period of the property. With this, will increase over time with inflation. So you don't get to lock in that CIPT payment. So most common questions that I thought which ones you'd want to ask. CIPT is not a recoverable outgoing by a retail tenant in Victoria. So as I said before, here the definition of retail tenant is much wider than in New South Wales. So as this becomes, and it is currently a problem, right? You do often get commercial tenants and landlords disputing about whether the lease is a retail one, regardless of what's written on the actual document itself, because there's land tax at stake. If a tenant doesn't want to pay land tax, and it's a fair amount of land tax, they can argue later on that it's no longer the lease is retail and that they need to be refunded for that payment. So we do see those disputes, but now that amount of money in question is going to go up, fairly, I wouldn't say dramatically, but substantially. So I expect to see more of these disputes as tenants think, look, if I can argue successfully it's a retail lease, maybe I can win something here. It is reimbursable by a commercial tenant. So if you do have a bona fide commercial lease, that's great. The new owner doesn't particularly have to worry about it, but that's obviously going to be impacted into rents, right? Because a tenant can only pay so much. If you include rent plus outgoings and the tenant's budget's $100,000, now they have to factor in CIPT. The rent is foreseeably going to have to be squeezed. So that's probably going to be reflected in, cap values and asset prices. So that's just something to think about. And especially with these long-term leases, right? If you're buying this, for example, the YMCA property, you got a 15-year lease, the tenant's going to be paying CIPT at some point during that lease. So the question of whether it's a retail lease or a commercial lease suddenly incredibly relevant because there's a fair amount of money that's going to have to be paid in 10 years' time. And who's going to pay that is a live question. I don't know how this is going to work, and this is sort of my question for you, but I anticipate there's going to be a two-tier system or two-speed market, however you look at it, with tenancies, because you're going to have landlords under the old scheme advertising their property for rent, no CIPT is payable. People under the new scheme advertising for commercial tenancies where CIPT is payable. And you're also possibly going to have to think about, how you advertise to retail and non-retail tenants. So how do you guys foresee that sort of playing out?
I think the retail tenancy piece is already pretty well defined in the market, so to speak, because the Retail Tenancy Act, nothing new. So I think people are already kind of used to retail tenants not paying for land tax and anything associated with that. So I think that's kind of an easy one to sort of predict. The commercial ones is interesting because, yes, technically the CIPT will be recoverable, but I think particularly some of these larger corporations where they use really good tenant reps, they're going to try to negotiate out of paying land tax as a whole. I mean, I'm sure you've seen dozens and dozens of leases where outgoings are payable excluding land tax.
Yeah.
So a lot of these really clever organizations, they'll negotiate the deal with that. So I think going forward, we're probably going to see a lot more tenants negotiating hard on the land tax component. I think most tenants are happy to pay for operating costs and all that type of stuff, but when it comes to land tax, I think a lot of tenants they're going to shy away from it. So I don't know. Like it's hard to predict, but what I will say is, a lot of these larger corporations, they're gonna negotiate their way out of paying land tax whatsoever.
Yeah, I think that makes the most sense, and it's probably the fairest to both sides, because if a tenant's signing a long-term lease, it's not in their control whether the landlord sells the property or not. So they wouldn't want to be caught wrong-footed. So, that sounds reasonable to me that everybody's just going to start, contracting out of land tax, commercial or not, just because that way there's certainty in sort of what your outgoings are over that long lease. If only part of the land is used commercially, there's no discount. So, if it's a half, say it's a shop with a retail residential dwelling above it, you have to pay on the whole lot.
So did you say that banks are lending on this tax for the whole period? So you can take out a loan for that 50K that you're paying per year, 1%.
No. That was in relation to the stamp duty. So the Treasury Corporation will lend the money for the stamp duty. They'll fund it themselves. But I haven't had any client use it. Is the long and short of it. Because it's at commercial rates and it's fixed, and most of them are getting a loan anyway. So they usually just, increase the loan amount to pay for stamp duty up front.
Okay.
Yeah.
Yeah, that makes sense.
Yeah, so at the moment, when we're transacting, land tax can't be adjusted to a purchaser under a certain threshold. It started at 10 million last year. It's supposed to go up with inflation. It's not exactly in line with inflation. The Treasurer picks a number that's, round. So this year it went to 10.2 million. So Kevin's going to pay, he's going to have to pay some of the vendor's land tax. And that's the same as CIPT. Any purchases above 10.2 million, probably next year it'll be 10.4 or 10.5 or something. They're going to have to pay CIPT and the adjustments of the vendor's amount. If you sell early, they won't give any money back. You've got to pay it in full as of 1st of January / 31st of December. We already spoke about, I don't think people are borrowing the stamp duty because I think rates, they're fixed over the 10 years and people assume they'll come down. They are coming down. Easiest way to find out if the land has entered the scheme is on the land tax certificate. And that'll also tell you any outstanding charges. So there's, have to do with the windfall gains tax, land tax, CIPT. It's gotten a lot more complicated than it used to be, but fortunately, the SRO gives you, a full breakdown of all the costs and charges that are being imposed and will be imposed after the purchase, because it will normally change. So how it's gonna, I don't know how it's gonna work with the advertising, but I assume it'll be just like retail, leases and advertising for that. People will be saying, look, they're either going to be selling it. This is the first transaction, so this is the price, but you won't pay stamp duty, or this is the price, but you will pay stamp duty. Um, I don't I don't go on realcommercial.com that often, but I assume I'm going to start seeing more and more of these sorts of advertisements just saying, look, under the scheme, not under the scheme, just so that people know up front, when they're shopping around, what the actual cost of the property is going to be to them. Because foreseeably, as we spoke about, land on which you don't need to pay stamp duty is worth more. But also changes in the valuation as to when the last transaction was. So if you're buying land that's entered the scheme, say it's in 10 years' time, but it got sold next year, a property that doesn't have to pay CIPT for 8 years is probably worth more than a property that doesn't have to pay CIPT for 2 years. So these are just sort of, it's going to be a lot harder to compare apples for apples, basically. You really need to go into the nitty gritty and find out exactly what the outgoings are and when they'll start. Sub sales are an interesting one. This I'd hoped to figure out the answer to before I had this presentation. Basically, I have a client right now who bought a commercial property. He's looking to on-sell it either for a higher price by nomination. The question is whether that counts as being the first sale, or it immediately enters the scheme upon that first sale, and the sub sale, that subsequent nominee won't have to pay stamp duty. I expect they won't, but I asked this question to the SRO, and they said that's a very hard one. We'll come back to you. So they are going to come back to me on it, and when I know, then I'll let you know. For that particular client, personally, I'd rather just have a second contract of sale going, so that we can be sure and also get a deposit in and all these other things. So that's my preferred outcome. But obviously, a deal's a deal. The buyer has to come to the table too. So in that situation, we're just going to see if they want to do a nomination or a subsequent contract. We'll figure it out. And once I know as to whether the buyer is going to pay CIPT, I'll let you know. Just in case you come across a situation where you've got somebody else who's bought a commercial property, long settlement period, you want to then buy it off them, just to see what your options are and how to sort of price that accordingly.
Yeah, so how does that relate to options then?
Yeah, that's a good question. So if the option was signed prior to the 1st of July, 2024, that's considered an arrangement and it'll remain under the old scheme. If the option's under the new scheme, then if they exercise that option at that existing price, then it should remain, that in that first transaction. If they're purchasing that option and then they're exercising it, that's the question that, basically the same question I'm asking now. Is that going to be considered a subsequent sale, or is that still part of the first sale? And I expect it'll be a subsequent sale, but the wording of the Duties Act wasn't set out to, with this in mind. So I've asked the SRO, and when I know, then I'll let you know. Because do you come across that situation often where people are buying options?
Not on a daily basis, but we do try to, in some occasions, secure sites via options.
Mhm.
So it's just good to know what the implications are.
Yeah, so that first, if the option's exercised by the person who entered in the agreement, then definitely it's just the first purchase. If it's on sold for a different price and is a sub sale, well, we'll find out. Because I'm curious myself, to be quite honest. There should be some, depending on the answer, there might be some good deals to be made.
Yeah.
Especially if the vendor doesn't realize that you won't pay stamp duty, because you could foreseeably, get it at a cheaper price than the vendor themselves is going to pay if the stamp duty is substantial and you're actually buying that option for less than what the stamp duty would be. But anyway, we'll cross that bridge when we come to it. Another one, I know you guys deal with Isabel Zhang.
Yeah.
She's very nice, a good client, and I came across an interesting scenario where, we always order the land tax certificates because it costs $20, and the SRO insures you against later reassessments. But what I didn't know was that the SRO is actually hiding the chargeable values on land tax certificates, waiting for people to then buy the property and then sending a bill and showing that number. So that happened with Isabel Zhang. We had the certificates, so we had the insurance, so she doesn't have to pay anything. But the SRO then gave us a certificate that showed nothing payable. So the subsequent buyer, I'm going to tell them, just make sure order the certificate because the SRO, might try and trick you into paying this assessed amount of land tax, which is a first charge on the land. So if their bank went to have a look at the deal, they would say, hang on, this needs to be paid first because it comes before our mortgage. If you're ever working with people who, aren't us, and the buyer's got a different lawyer, just make sure that they're ordering land tax certificates, because sometimes people can just use the one that's in the contract. Classic mistake. And this is not a new thing. It's been around for a long time. But what's new to me is that the SRO is trying to, I wouldn't say be dodgy, but they're not being forthcoming with the actual amount of money that's owed on the land. And when CIPT, starts being chargeable as a first charge on the land, then this amount's going to get higher. So the stakes just go up.
It's terrible.
Yeah. I couldn't believe it when I was talking to the guy on the phone, because I called my way up the chain and was like, hang on, how is this possible? And they said, look, they've got jobs to do, basically.
Wow.
So
Jesus.
So yeah, just gently remind the buyers to gently remind their lawyers. Don't get caught out. Don't get lazy. Don't try and save $20. The amount of money at stake, tens of thousands. It's not worth it.
Yeah.
Bloody mobsters.
Yeah, the losses are pretty substantial. So that's basically the summary of the substantial portion of it. It's still new. We're still going to see how it changes. I expect there to be more changes before, that 10-year period's up. So how it goes on, I don't know. I'll let you know as we continue. Thank you for sending clients our way. I do appreciate it. You can call me anytime, anything you need. If you have your own deals you're buying, of course, you'll get made rates. If you need anything at all, happy to help. You're not going to need wills. You're in New South Wales, get a lawyer up there. But for everything else, happy to help.
Yeah.
Nice. Great. Thank you.
Yeah, no, thank you. Actually, I was just going to ask, do you have a lawyer in New South Wales that's just as good as you that you can recommend us?
There's nobody that's as good as us. Come on. But no, honestly, like when Alex called about that Perth one, I don't know anybody up there who specializes in commercial who'd be that I can give you the name of. I can help you with GST questions, anything that's federal. I can assist with, but the problem is when I look at these contracts from interstate, I don't know what the common pitfalls are. I haven't spoken to the state revenue officers up there. I don't know what they're doing. You have to be so up to date with this game just to know how they're doing things, that I wouldn't want to advise and poorly help. Giving you bad advice is worse than anything, right? So
Yeah. Fair enough.
yeah. But if you do find someone who's good, please let me know, because I always like to basically know who's good in the hood.
Yeah, 100%.
I don't know all the answers. That's the other thing. I can call people, and finding out things from the SRO is great. I know lots of property barristers. If there's anything I don't know, I just call them. But if the buyers want to do anything unusual, call me first, and if I don't know the answer, I'll find people who do know the answer.
Yeah, cool. No, I appreciate that.